The LGPS is going to be around for decades to come, so we need good long-term returns, and we think good long-term returns means having really solid corporate governance.
LAPFF stewards corporate performance on good governance, so we look at areas like executive remuneration, audit and accounts, and well-functioning capital markets.
LAPFF has done some excellent work on executive remuneration.
Within the broader context of governance, executive pay is a critical aspect of that. LAPFF wants to ensure that executive pay is reasonable, transparent and justified by performance.
The members whose pensions we're paying do feel it if there is an enormous difference between the salaries of ordinary people and the earnings of top management.
Executive pay should reflect performance that drives long-term sustainable value.
We need to push back on cases where the pay is either as a base pay or in terms of bonuses is excessive.
If executives are being paid for failure or for short-term improvements, then that can be a sign of wider risk to investors.
We want our companies to attract and retain really good executives, but executives shouldn't be irreplaceable. So LAPFF is very, very keen to make sure that these companies are sustainable and planning for the long term.
One of the things that LAPFF have been looking at recently is listing rules. So listing rules dictate which companies can end up on the London stock market, for example.
We do have some concerns that it could weaken corporate governance and reduce shareholder protection, which is obviously of significant concern to LAPFF and of a significant concern to institutional investors.
Market listing rules need to reflect a high quality opportunity in London.
LAPFF has formed a capital markets working group which has done some excellent work regarding changes to the listing rules in the UK in particular.
LAPFF speaks for the asset owners. Policy making on things like listing rules shouldn't be set by what we call the fee takers, otherwise we risk diluting standards and making London a less attractive place for companies to list.
LAPFF has very strong views on the provision of audit services, and that auditors should be doing very little, if any at all, non-audit work for these companies.
Auditors need to have a real independence, so they shouldn't be beholden to the company for such an amount of work that they would feel the effect if that was withdrawn.
Sometimes you do need to question whether the rules are appropriate, and I think LAPFF does an excellent job of that in asking the questions of the accounting regulators, for example.